Tell us XPO Logistics, ticker XPO, and that's a stock advisor recommendation from a number of years ago. What in the heck just happened? They weren't supposed to report earnings today. What happened?
Well, XPO was supposed to report earnings today, but they weren't supposed to do
when
it
they did
until after the markets
right.
closed. Yeah. So XPO Logistics, one of my favorite companies, I should say, coming in. It was one of the best performing industrial stocks of the last decade. The stock was halted midday today and then jumped 10% immediately after. And it appears, as we said, the stock earnings that were due out after market today, someone got hold of them midday. First off, the earnings were fantastic. They did 84 cents per share on revenue of 4.22 billion. The analysts were expecting 40 cents per share, so less than half of that, on revenue of 3.85 billion. This is a business that has done really well in the pandemic. They have been investing for years to build out their e-commerce, logistics, and warehousing operation for retailers. The value proposition is no one retailer can compete with Amazon's scale alone, but on a platform with a lot of other retailers, they can reach that scale and sort of offset some of what Amazon has going for it. We saw that play out in the quarter. Last mile revenue, delivery to the house, was up 15% year over year. Supply chain revenue was up 5%, and supply chain EBITDA was up 15%. There's a tech angle here too, kind of. XPO Connect is an online brokerage that helps match truckers with shippers, and truckers love it because it helps them reduce their empty miles or their non-full trucks. It's up to 70,000 carriers on the platform now, and it helped truck brokerage sales grow by 27% year over year. But let's be honest, it was not just the earnings that caused that stock spike. For all the love I just gave this company, it trades at a so-called conglomerate discount. It is a lot of different businesses in one, and its multiples across the board will trail more focused companies like C.H. Robinson in logistics and J.B. Hunt in trucking. For that reason, there's talk of a breakup. They tried to sell a big portion of the portfolio before COVID. They called it off. Now they're talking about it again. My guess is investors saw the stock halt and assumed we were about to hear some big news on that. And, we still might down the line, but my big takeaway here is this is a company that if it breaks up, I believe this management team is only going to do that if they see real value there, if it's a real nice premium. But this is a business that works without a breakup. And this is a stock that I'm really happy to continue holding, even if nothing happens. This is a company that was built for the next generation of logistics in the post-COVID world. And I really like what they're doing. And these earnings, I'm really excited to hear tomorrow morning before the market opens when they actually talk about it. But these earnings are exactly what we would have hoped for.
Well, it's strange, right? Because really the story for XPO for the better part of the past decade was the management team was building a business, was acquiring disparate pieces of the logistics industry, shipping industry, to try to build something that should be the sum of its parts should be worth more, right? And it's paid off. It certainly paid off for investors.
Oh yeah, 1,300% return in a 10-year period.
And here we are. And the thing that's really been the message the past almost year now has been break it up, right? It's like, it's a break up the 27 Yankees here, right? You have this murderer's row business that there's these calls. The difference is that you have people looking at, my assumption is you have these calls because people want that short-term pop. Because right, like you said, that conglomerate discount, because it's a little more complicated. So each of these separate businesses stand alone. When you have a clear line of sight, it's easier to say, well, this is worth this, that is worth that. But when you have 10 of them and you put them together, it maybe be a little bit less clear.
Yeah. Well, and it's interesting to say that too, because this is what this management team does. Brad Jacobs first built a waste roll-up. He built a rentals roll-up, and now he's doing this. And yeah, this was $100 million sale company a decade and a half ago. And I do think, and I'm hoping one day we're going to have him on a podcast and we can argue this in person, but The CEO is ruthlessly dedicated to shareholder value, you may say, because, and a lot of times companies get in trouble if they're too sentimental about the empire they've built. So, in a way, I want to respect the fact that he's saying the market says this isn't as valuable as I think it is. So, I'm looking at options. But in a way, as a long term holder, as someone who's looking well past this next quarter, I would be very content and actually prefer if they just keep it together and see if it plays out the way I think it will, and I think the way they think it should. So I have mixed feelings about the breakup, but definitely I think Wall Street would love to see it, and definitely you're going to see a pop. And yeah, I think they got a lot of people's hopes up when they when the stock was halted today.